Greetings, market rebels. Welcome to this week's macro measure. I think it's a little in front of 1:30 here, February 12th, Sunday, February 12th, 2023. I'm Wayne. My partner Ryan's wrapping up the weekly market overview outlook, which will be going out soon. Video links will be going out later. And got to get started here because this is our trusty disclaimer. Please have a look at that, and then please have a look at our trusty market rebellion intellectual property rights. And it's got to get started because this is so interesting. This is such an interesting juncture, in my opinion. Let me take a quick stop share. Let's get rid of all this PowerPoint stuff, and then we can look at what we need to. I don't even know where to start at this point. Let me get to the right screen, because I guess what we should do is start with a quick recap and then go from there. But boy, it's such an interesting juncture. It's wow. We'll talk about a lot of different things. I don't even think I'll be able to remember all the things that I'd like to try to share, because I looked at things for an extended stretch this morning after getting my head clear from last week and getting a little time away from charts, and come back and look at them objectively as best I can. And boy, I'm just blown away by how many different factors are in play and where things are. And we'll kind of get to that point, but let's quickly review. Last week, we thought, look, the market had recently gotten overdone. We thought, excuse me, the market would probably back off initially, and then we'd have to see what happened from there, because it was tough, right? You're in this kind of intermediate-ish term uptrend. You might be switching trend, right? In the bigger picture, these are just some of the things we're considering. The breadth that we've seen in terms of improvements in breadth we've seen since the October lows have been dramatic. There's been some really interesting developments in market breadth. This has been a very strong year to this point. There's a lot of seasonal things, cyclical things like third-year presidential cycle, all that kind of stuff we've talked about that's been more or less essentially supportive, right, or helpful, bearing out, however you care to characterize it. But after we got that initial pullback there on Monday from Friday's close, this was our support going out, and we said it probably would come down to the next support level. That's where we put that sort of blue line now, but now it's more of a pink, hot pink type of a line. And it did really play around there, right? It played around there on Monday, on Tuesday, on Wednesday, right near our support line. And that also, right, was the rising 10 there in white. And then we had this 408, 409 sort of flatline-ish situation that we kind of homed in on. And that was big all week long. And until really they took it down below there on Thursday, as you could see, and then they brought it right back up with a saving maneuver. And I think what really became interesting to me, so there's a lot of even just interesting things about this, right? That you were below 408 a little bit there on Thursday and a little bit on Friday, but yet they closed it right just pennies above, right? That's interesting in and of itself. It held the 15 SMA there in red. Another interesting factor. The 20s getting right down below, which means we kind of took off some of that overboughtness. Even though the 20s rising pretty swiftly, it still means we took off some overboughtness from where we were, because here's one thing that I don't often get to show because it's just too much stuff that we've got going on here. We could literally be 5 hours long with all the stuff we could look at. But this is one thing we could look at and to check out how far removed, right, the distances in percentage terms we've gotten from some of the key SMAs that a lot of players, even institutions, keep an eye on. And you could see the white one corresponds to the 100. And you could see that this move that we saw peaked out up here relative to the 100 fairly high. There's no other time until you go all the way back to here that got close, right? So you've got to go back to really May of 21 when it got overdone to that extent. So that kind of gives you that idea of just how far things were pushed in terms of stretch But if we look big picture now a little bit, this we're above, right, this resistance line that us and virtually everyone else that draws trend lines has been talking about for some time. We've been kind of kidding around about it. It's the most, most watched trend line of all time. And it may be, frankly, really, but look, after it did what it did there, we don't want to be on this chart. We want to be on the other chart, this chart here. After it did what it did there, we saw them sort of save this, I think, on Friday. But this is where it got really interesting, in that I was checking this stuff out and mentioned this in Rebel Pit Live and threw a few charts in there for folks to see what I was seeing. And I even reached out to my colleague, Brian McCormick, and he's very busy, I'm very busy, and we don't really have a chance to speak very often. But I thought it was interesting because, and I'll discuss that, here's what was going on in XLE. So there was, right, that I think Russian announcement, but there may be some other geopolitical things going on, which is what I'm getting to. But at one point, virtually every sector was down, except for really XLE, XLV, XLP, my bad, and XLU. So a lot of the what you would consider defensive sectors were all down really at one point. I'm sorry, we're all up at one point while everything else was down, excuse me. So those were all doing well. Energy was doing well. And I started looking at other things, and I'll show you those. And I said, this market really, I thought it was sort of more of a routine pullback initially. And then I started thinking, this is starting to turn into something more. And here's what I mean. If you notice, the dollar, which has been pretty much in an inverse relationship with the market, the dollar tried to assert itself there a little bit on Friday. And that got me concerned, right? It was up a little bit, starting to maybe come off of this low, and maybe it will make some noise to the upside, which hasn't been good for the market. Yields were also up. Okay, so they started to move up higher. And then the VIX at one point was up pretty handily as well. And this is the thing, by the end of the day, right, they came in and just really reversed things. If we look at the SPY, I'll just bring up a 5-minute chart, and you'll see right away how, where they stepped in at what time and to what degree. And that pretty much changed the complexion of things, right? Because at one point here, we were really struggling, but they really came in here in the afternoon and started to take things off of those lows, hold them, higher lows, generally higher highs, and they moved it all the way back up to the 408 level. So you can see that it's probably make it look a little bit more dramatic that the afternoon is what here's where I'm talking about. And they kind of worked it back up. And a lot of those sectors that we just looked at, they repaired themselves to a degree. And so I was like, that signal of risk off concern, it was a little bit less than should say significantly less by the end of the day, because you could see many sectors managed to claw their way back to positive, along with some of these defensive sectors that kind of hung in there. So that kind of muted that situation a little bit. I don't know if it was because there was concerns over whatever they shot down over Montana and potentially something else in Alaska and wherever else these distractions, I guess you'd call them, are popping up. I'm not sure what's going on with all that, but that seemed to, like, once that became a news item, and it wasn't, I felt that some geopolitics thing was maybe starting to erupt or on the verge of erupting or something. And then when that kind of hit that, hey, that this object or whatnot has been addressed by the military, then that was really it. And then things seem to kind of revert back, with the VIX getting clubbed as it often does on a Friday. And so that's really what made it very interesting. But the thing is, I don't know if that is legit, right? Is that markup, is that a expiration situation? With not only regular, weekly expiration, but 0 days till expiration options. What was it, right? I just don't know. And so if we look at it again, we take another step back and we say, look, there was the high, and here's your low. And even though you've got some green candles mixed in there, you've been worked down for the better part of the last 6 or 7 sessions. Is that enough to cool things off? And if I just look at one of my cycles grids, the spiders right now, just to rattle off a few RSI readings, spiders on a 2-hour basis come in at about 47. Spiders on a 4-hour basis come in at about 52. Spiders on a daily are now at about 56, right here. See that, at least the daily on here. So are you really overbought anymore? And I would say no. And if we go a little bit further, where's my good, I want that, not the seasonal switching. Come on, where's my, might be here. Is that the one? Nope. I thought I had this with something that I'd be able to pull up more quickly. It's not on that one. Content restricted. No, that's not it. It's another, it's a market rebellion. Why am I not seeing that? It's not that one either. Is it this one? Yeah, I think it is this one. So we've been checking these out. So let's jump into this, right? Because we've been checking these out and we'll see that this did kind of back off, right? So if we look at this, there's a little bit of a back off there on the percentage of stocks that are above their 200-day average right there. And now if we jump back to MMTW, the 20-day, you can see that that definitely corrected more, right? So we have to say that, like, look, there's been some legitimate corrective action here that's occurred. It's going to show up more in the 20. That trailed stocks up more quickly, of course, and so things haven't fallen as nearly as much with respect to the 50 and the 200. Here's this quick seasonal reminder, and I want to point this out, that this presidential cycle where you get this pre-election year that we're in, notice, right, that you're pretty much up for the first half of the year, sideways, a little bit of a corrective action, early start to the fall, and then you finish strongly. But notice that things kind of level off, and the second half of February is a little bit of probably a breather from the strong run you had up to that point, probably, right? That's what it looks like to me in this historical pattern. So it wouldn't be out of the question, right, for more correctiveness, right? For more corrective activity, I should say. This is the one we've also been flashing, just so everyone knows that this third year is the strongest. This is a different source. This is, I think, Ed Yardeni, but his firm. But there's your 13.5% performance for the S&P, which, typically is what we use as our main proxy for the market, because folks can trade it. Most folks can trade it relative to SPX. But check out this, right? That this is what's going on in terms of, you could see, right, what happens in terms of recession. So the market seems like it's bucking that trend right to this point. And it seems like the market is maybe thinking 1 or 2 more 0.25 increases by the Fed. But I don't see it going more, but it seems like it's not like it's over yet. The market doesn't seem to be indicating that it's over yet. And so that might be a little bit of a surprise to a lot of people. And that maybe what happened is they pushed too much money in too fast, as they often do. And a lot of you know about the CTAs that flip flop and all these other things, and passive investing factoring in. I think my way of looking at this, and I'll come back to the calendar, my way of looking at this is that I think a lot of money has gone into the market, and I think a lot of people were forced to cover shorts. And so I look at it this way, much like I look at UOA these days, which I think is becoming more and more sophisticated. It's not as if it just, hey, all you need to do is look at this and this is your roadmap. A lot of money went in. That's bullish. I guess as a starting point it is, but ultimately what that means is that there's something that's in place that sets up for volatile trading, which is good opportunity for us. When you have so many people betting, I think that the market's going to recover from here on out. If it does recover, that's great. We'll just keep going with it. But if that doesn't work out, they're all going to head for the exits, and you're going to get, I think, a great opportunity on the downside. So I know a lot of people struggle with trading the downside, but I think the sooner you can get over that and be willing to just be more of a mercenary mindset, as I say, look, I'll take the trade in both directions. I really don't care, because I'm here to make money for myself and my family. I'm not here to be a hero or anything like that. I'm not here to cheer on the US economy. I'm just here to make money. Because I can tell you right now that Wall Street is there to make money. They're not there to be heroes. But having said that, right, where does that leave us right now? And I think it leaves us in a tough situation, because outside of Bollinger's, bears, I think, asserted more and more control over the week, left us at neutralish RSI readings. Now, so, we see that there's been some corrective activity. Now, if we look at one of my other screens, and I know I have too many, but this is just, you got to be true to yourself, right? This is what I think I need to see to try to make sense out of all this stuff on a regular basis. But you can see that some of these things, I would really draw your attention mostly to the McClellan oscillator, that's really corrected, right? So we have seen that corrective activity. Things did get quite high on the McClellan summation, which theoretically I think bodes well. It's a good argument for the bulls going forward that, hey, things have really, really improved. But again, if they're jumping the gun, and remember, even inside of longer term bear markets, right, things that last longer than, let's say, a year, you have a couple different phases, and you have these rallies where a lot that are incredibly strong, like we have seen, that people are willing to say, okay, it's over, I'm ready to go with it. And as I've said many times, they very well could be right in the end, even though I don't think that's the case. I still have to respect, right, what they've done. So this week we saw, really, to kind of sum up so far, we kind of got the market we thought coming in. I think we thought back up a little bit, see if support holds. If the 408, 409 didn't hold, we thought 407, believe it or not, but it went below there too. There was a 407 level, and then there was a 403 to 400 kind of range, which I was just thinking, well, there's a lot of different reasons to feel like there's some support there. So it's almost like a support band or range more so than one level. But we didn't really, nothing got resolved. Now, to carry on the conversation, because this is just how my mind works, unfortunately, and especially unfortunately for you, at this point, is this the tap from the underside of what was formerly support that will now convert to resistance? And we just don't know. We just don't know. If the energy sector really is on the way back up, and it was a forceful move, I don't know. It's really its own thing. Like, you've got to be all over energy when you're in it, for like consistently. You really got to stay on top of what news is due out, what news is impacting. But we have to say, right, long-term uptrend found support again. We talked about this as sector situation near the 100. And then on the way back up above all SMAs again, does it close this gap? Does it keep going and kind of work its way back up? I don't know. I mean, it seems like that's the trend. I would always kind of defer to the trend. But it's definitely been very tricky ever since we got concerned about it back here being a little bit overdone and sensing maybe that this could have trouble. Ever since then, hasn't been an easy trade in there. It's been a lot of up and down, a lot of news reversals on certain days, and so on and so forth. But that was a pretty forceful move. So that looks pretty good to me. Put some ideas in on the long side in UOA Pro as a result. But the reason I even bring this up is because, right, if we start seeing higher gas prices, like that's not going to help the situation in any other than the oil company situation, right? So that doesn't really help folks out there that are already, I think, struggling. So going back to it, right, that might not let the inflation situation play out. My sense is that a lot of players have just, as I said, jumped in big, either short covering, new ads, I'm trailing in performance, I better buy some, whatever the case may be, true believers, the whole gamut. But there's a lot of money, I think, that piled into this market thinking that it's over. I think that they think that inflation is going to come down more rapidly, more quickly. And I'm not so sure, certainly not an expert on that. I don't have time to even be an amateur on that, really. But my just as a trader take from just trying to keep up on things, talking about them with Ryan, finding some tidbits out there, I've got it that no, I don't think this thing tails off as much as quickly as they think. So in other words, disinflation seems to be baked in already, priced in already. And I'm not so sure that it works out as well as and as quickly as they hope it will. If that's the case, are there a lot of people trapped in this market that are really going to get a rude wake-up call, and the Fed will just continue to slowly, but relentlessly march rates up at least 2, maybe 3 more times? And that would, I mean, to me, like, I think rates are putting a lot of pressure on America because I think America is far too interest rate dependent. And that's where we've become, that's where we've come, where so many things revolve around the Fed, and they shouldn't really have that much dominion over people's lives that they do. And that's through mismanagement for decades and abdication of responsibility. But we can't, who cares about that, right? We're just trying to make sense of it all right now. But what happens here, right? So this is a breakout. Is it a failed breakout? Is it going to come back to where we just saw it come back to, right? And you could make an argument that there's some support right near there, 405, and maybe I should have last week, not just go from 407 to 403. But I really thought the way it looked that we'd probably visit the 20. We didn't quite get there. That's kind of where I was, with the top of my 403 level was coming from, last week, so right near there, 400 to 403, with some other flatline stuff in there. But there's a lot of support here. So does it support? I think that you're going to have some CPI data coming out. There's other important data coming out in reports this week. I think the Fed speakers are pretty light. So if the Fed speakers are light, things come in line, you have to say, like, this is the bull's moment of truth approaching, because they need to say, like, okay, we're going to take this whole thing and keep working with this intermediate trend that really has a couple of legs to it. There's your initial thrust higher, and then you get this corrective action, a nice little pullback, little pause there for a few weeks, and now they've reasserted themselves. And can they do it again? And if the numbers come out fine for their case, and the Fed's kind of light on commentary, you would think, well, constructively, you ought to be able to hold above that former resistance line that we would now expect to be support. So if they even bring it all the way back to there, remember they tested it right after this initial breakout here. So it's not like they didn't test it already. They did. So I don't know if it really needs to be tested. It never really needs to be tested, but a lot of people really feel a lot better about levels if they've been tested and then something runs. And this was a test and it held. Will there be another one, or will they come close? Don't know. The interesting thing is that at this point, I think they could crack a couple of things that are pretty decent support levels, like the 408, like the 407, come down to the 405, which appears to be, you could make an argument there's another support near 405, crack that, crack the 20, but as long as they stay above that 400, which would be SPX 4000-ish, then it's still above, right? Even if you fell that far, probably even to 395-ish by the time the candles would form to get down there, which would probably be near that 50-day there in gold, 395.81. You could probably say, look, an overshoot below 400 to 395 is even okay, ultimately, as long as they support it there and then start taking it back up. That, though, at this point, that would be beneath that support line. If that were to happen out here, the 50 would be above there, and then you'd have that above the support line if they did bring it down that far. And a lot of people would love the fact that it backed all the way up to there, corrected that much, and then they held it above that line and the 50-day, or by the end of the day maybe, and then start to take it back up. That would be the kind of thing that a lot of technicians really like to see, because people that want to go with this trend don't want to have to do that from a permanently overbought state, although that's the way you have to do it. But fortunately for us, as option players, that's a lot more I guess workable for us, because we can roll, right? We can be smart rollers, roll at the right times and still stay in trades even when things continue to be persistently overbought. we can still stay in there with some greater degree of confidence because we're rolling. And stock players clearly can't do that. So that would be kind of a lot of thoughts to share on this. I don't think it's an easy juncture, frankly. It's a very interesting juncture, but not an easy one. If we look around, so let's go back. You have a defensive shift that the market took, but then they kind of lessen that defensive shift by the end of the day. They did get things up there and back them off. So I do think it's kind of more of a neutral part level that we're at right now. And so, you could entertain really being ready to go in either way. We do know that there's potentially a lot of people trapped if this market rolls over. I think because of what I've looked at, I think a lot of money has really gone into there. And we really can't argue that there hasn't been super strong breadth developments here, because there were super strong breadth developments. And now some of those have corrected, or at least corrected somewhat. So you kind of need to say, well, wait a minute, the market really did. It wasn't just like they took the big players up. By big players, I mean, they took up the big names like Apple and so on and so forth. So let's take a look at those, for example. So Apple, as I'm sure most of you, if not all of you know, is the biggest market cap out there. And a lot of people will tell you, you want to know what's going to happen in the market, just follow Apple. And so with Apple, it's above the 200 there in purple, but it's got a lot of the short terms coming to rise up right now. So I think Apple can trade up to about 170 if we go in. That's my kind of expectation for something more than a $5 move. Let's put it that way. If we do have another leg higher in this market, I also think ultimately Apple can really, if we do get a really bad situation economically, that Apple can trade down a lot lower than most people would believe. But again, going with the flow, but I think Apple can work its way up to about 170 in more of a bullish scenario. But Apple, to me, it's got the support right there. So the way I would look at this would be, look, if this thing doesn't hold and they start working this thing, it should support, right? There's a support line we just modified. There's some big time moving averages. Even if it drops to 150, you're waiting for it at reasonable levels. If it's really shredding through all that, I mean, that's a big deal. Microsoft, though, right? Microsoft had a hell of a run, as I'm sure a lot of you know. And that was good for, we were happy with Apple and Microsoft doing that because we had good UOA ideas, I think, for those. But this, you could see this got a little crazy there on Wednesday and even still Thursday, and then Friday it backed off. But I think this really should back off a little bit more. But Apple to me looks solid. This looks a little concerning, but we have to give it its due in the sense that, look, this is higher than this. This is higher than this. This is higher than this. So this is trying to convert, as the market's trying to convert. Microsoft is trying to convert from a downtrend to an uptrend, starting to put those in. And you can see that this is the lowest low. It's tough to get a good visual comparison here, the way this unfolded, but we know that this high is similar to this high. So that was a good run, but I would feel a lot better about this again if it put in a little bit more of a pullback. You put in what's obviously another low and then go from there. I'd feel a lot better with it then eclipsing these highs, and probably means you got more time to run for a couple more months, at least attempt to go to the upside. Let's go take a look at Amazon. I think the reason I'm doing this is just to see what juncture these things are at. And this looks concerning, right? So I think a lot of this got overdone. Now, is it immediate concerning? Well, it's 48 on the RSI that I've got on this chart, 49 up here. So yeah, I mean, not overdone, but I mean, you could see that certainly looks like it could take a little visit to the 50. And then if we add in Google, we'll take a look at Google, and we'll take a look at Meta just to pick some of those big names out. And that looks that had a rough go. You all probably know why with that AI stuff, but its chart, they're holding the 50. You lose the 50 though, that looks pretty bad. that would be, you would expect even more damage to occur there. And I think Meta, fortunately, we put a bearish trade on here as well, an idea in the log at least, and this got really extended, and so we were willing to step in, thinking that could be an overdone move, and if the market's going to get heavy, this should start closing more of this gap. But I would say, look, that probably should still close more of the gap. How far it comes back, I don't know, but those all look as a package to me like, that it would take a very aggressive bulls to start buying all of them right now, right? There would have to be a really, they'd have to be like a real surge. Otherwise, they all look destined to me to want to come back. Almost all of them look destined to me to want to come back a little bit more. And if they do, right, then buy them. If I'm a bull, I'd rather let these things come to a little bit cheaper prices, and I can add after some corrective activity, less I'm, really foaming at the mouth to add, and that could be the case. But I look at those and say, these things are not really in a position where I would say technically where, hey, I can't wait to go in on Monday and start buying calls in Meta. It just doesn't have that look where you can't wait to go long it. Just show me some momentum in a good market, and I'm going to be all over that. It just doesn't flash that. Really, none of those things that we just talked about really flash that to me. Was I on this one? Yes. So going on a little further with our names, I can look at some other big ones, and we'll see how it shapes up. And I think this is the best way when I get in a real tough situation where the SPY is tough to make the call, right? I'm like, okay, let me look at some of these really big components and dive in, dig down, and find out what's up there. And this, Tesla's run overbought. You would think more than one day, even coming in just a $5 or $6 more bucks would make a little sense, right? To kind of take off some of that frothiness. The same thing, like this chart, NVIDIA does not look, this got overdone. I'm happy that it did. It was another one. We had so much big name UOA, which I'm always glad to see, because I know a lot of people like to trade the real big names, the popular names that move, when there's good reasons to want to trade those. But you can see that, that got overdone, and this was really up there. And now you had that kind of correction from that high. I think it would make sense for this to pull back a little bit more too, in my book. So a lot of these, again, continue to be. Exxon might be an exception because it's that chart. That's a chart to me that if it weren't for the fact that we're energy, if our indices were acting bullish, this is what I would want to see, right? This thing's been struggling at this level, and now it's strengthening, and you can see there was a volume surge, which again, it's tough to really read too much into that, but I'd prefer to see strong volume rather than not, when I feel as though I may be breaking out. But remember, that's an energy thing. You've got to be all over energy to really trade it, because a lot goes on in that space. There's a lot of different developments that affect things. Not easy. Look, this doesn't look that great, right? This is not where I buy. Now, if they save it here, they start to turn the momentum back up, I certainly would get interested in it as a bull. But if you said would you like to buy it here this very second? No, right? Because it's coming off after consolidating. It couldn't go higher. The market couldn't go higher. It's had a big move, right? And I think, right, it wouldn't be out of the question for this to come back. Once again, a few more dollars at least. See if like on a flat line somewhere in here, let's ballpark it at, well, I'll just ballpark it here. $3 more, right? So if you drop back about $3 more bucks, see how it supports there. If it holds there, it and the market start turning back up. Yeah, I'm willing to trade that there. But right now, just 2 days in, really, from this high and this reversal, and maybe losing the 20. No, I don't like the way that looks. So there's another one that I don't think looks great, right? The way that it went out on Friday. But if we just take a look at just a few more names, just to give us a little bit of insight into what could happen here. This to me is more constructive. The only negative here is how far it's moved in the last 6 or 7 sessions. But coming off of that low, it's a counter trend idea. You can see the intermediate trend does not look good. It hasn't been running with the market, but maybe those defensive spots will start getting more of a bid. And speaking of those, we had things like in this sector, Boeing was doing better, I think, at one point, but then it didn't at the end of the day, by the end of the day, it had backed off. But things like Raytheon, if you check out what was going on in there, this was having a good day. So Raytheon, I think General Dynamics, I think, was having a good day. Let me think if I'm, yeah, look at that. I mean, it was a nice 2% move back up. Lockheed, just for the record, we'll throw Lockheed in there. Lockheed had a nice move as well. And so this is what got me concerned about the geopolitical aspects of things. When you mix together, right, you know, the higher, the dollar strengthening, oil catching a bid, these defense stocks catching a bid, the VIX up, a lot of the defensive sectors, this all came together and made me start thinking about, hey, this is definitely something, or could be something at the very least. We'll take a look at Meta, and then maybe we'll take a look at. So again, I'm sorry, we did take a look at Meta. So you can see, like, just looking at that one, that to me looks like it wants to come off. J&J, it also has been struggling, kind of firmed up a little bit there on support. You know, maybe that defensive name bid, but that doesn't look great. I mean, other than the fact that you could get a lift with positive RSI divergence here, maybe start coming back up, but the trend of that doesn't look all that great. So, right, the way that I'm looking at it is a lot of these big name stocks might be the telltale sign, because a lot of those charts to me do not look very good. So kind of coming back to where we were, as of right now, I'm going to say I'm thinking a little more pullback, give the benefit of the doubt to the bulls in terms of what's happened in terms of the low, this burst all the way to here, the higher low, the higher high. We'll give them that, but you don't want to see, if you're a bull, you really don't want to see this correct too much. You really don't want to see this pull back all that much below 400 in SPY. You don't want to see it pull back right below our former resistance line there in pink. And probably that would dovetail with the 50 if we kind of like have a couple of rough days in a row. But there should be multiple support areas all around. I would say, look, until this, probably at this point, until the 50 is really in danger of cracking, I'm willing to say I still would think more pullback makes sense here. But I'll give the bulls the benefit of the doubt unless they can't hold the 50 should it get rough. Then I'm thinking, okay, that's a big problem. But I feel like this is a very tough juncture. There's a lot of things I'm leaving out that we could talk about, and this would just keep going on and on and on. But I look at it right now, and I've been communicating to everyone that, hey, who's taking more and more control over the market. And I think the bulls had been cementing their control. I think they lost a little bit of control, a little bit of the grip on the market in the second half of last week. And so I think it's a little more concerning. Like we said, we looked at that seasonality, the second half, middle of the second half of February, we're entering now, even in that third year, presidential election year, pre-election year, that can be a rough stretch. So after the run we've seen, does it make sense for stocks to give back a little bit more? Yeah, maybe it does, right? It's been a hell of a run, a heck of a good year in terms of the start. Maybe you just need to pull back a little bit more, then, right, hold near or just below 400 in the SPY, and then see what happens from there. See if they can muster another round of rallying. But remember, CPI and other reports this week could start to set the tone and maybe shift things. But I still think long term, I'm still more in the bear camp in terms of where maybe we are by the second half of the year. And again, I hope to be wrong about, I just hope all my concerns are wrong to have. I really do. I'm not hoping for bear side stuff. I'd rather trade in a bull market for the next 5 years. It's just way easier, in my opinion, way more opportunity. But here, it might help us look at the diamonds too, right? And I think it's clear, right? Triangular consolidation after this really strong move. And interestingly, XLI, which I'm not sure what's going on here, but I have to note that the industrials themselves, that sector, which I'll talk a little bit more about in sector situation, but this sector started to get a little bit of a bid too on Friday. And it just hasn't been able to break out, but you can sort of see there's something like a triangle in there, right? Where it's sort of like you could draw this and then you could draw this one here. I won't do that, but it's almost like this is coming towards the end of the triangle. And that could be interesting too, that if it breaks down or breaks out, we could definitely put the support line in now just to bring the visual. I think you can all draw a nice little flat line towards the highs, but you could see where that would be just like this. So you're getting towards where that apex would be, and that could be interesting. So maybe watch that 20-day in the XLI, and if that can't hold, right, that would be a sector that was a leader, pretty much held on to its gains to this point fairly well. And so if that starts to roll over or break out, that could be, again, that could be the leader in some way. But the way that I chart these, and I think I mentioned it last week, is and remember, there's a lot of bullish patterns. We've noted that before in this market. Still, it's the question of, do they lead people into a false breakout, right? Bull traps, excuse me. And is the rug going to be pulled on them? I think those are the big questions where almost all of us are wondering about. But this is really, right, this is really the triangle consolidation that we've seen. And then, my assumption, this is really what I work with. I assume that the incoming trend is how we will resolve, right? So I'm really, like, if I'm really struggling, I'm going to try to give that uptrend, an incoming uptrend, the benefit of the doubt. But right now, it's pretty tough to say what you really, what your strong lean will be in this thing. I think you're better off, even though you could have a false breakout or breakdown, I think you're better off waiting until you get something developing, jump on board, knowing that you can have a false breakout or breakdown, and manage accordingly, right? If it acts well and bursts, well, that's great. If it doesn't, if it puts a burst together and then fades quickly, don't overstay your welcome. I mean, that's the simple way to do it. But right now, it's a tough call. Like I said, this sets up interestingly for me, because if you think that there's been a lot of money that's been juiced into this market, as I do, and there's a lot of people thinking that this is going to go up and away, and we're on our way again, kind of like the Tom Lee School, 4,800 in SPX by end of the year. If those people get disappointed, realize they need to act defensively, like I said, this will break down, potentially break down quickly out of that triangle, and you'll be at the 200 in the diamonds before you know it, quickly, my opinion. And then there's not a lot of the recent support on the way down. You can see that the alacrity at which this moved up, this could be a really quick swoon too. So I think that we're setting up for these kind of powerful moves. Now we can't finish. This is a super long macro measure, but there's a lot. I'm leaving off more than I'm conveying, frankly. But that's just the way it is right now. It's an incredibly interesting juncture to me. Look, this is it. We talked about it. The QQQ above the 200-day there in purple. This is our purple line above the 20. All the shorties are rising on the SMEs. Even the 50 and 100 are. Right, so at 150 is rising. I don't know if the 200 is, but it looks like it might be 200. Yeah, I can't check that easily, and I don't want to waste the time, but it's close to starting to bottom out on the parabola and start to come back up. But this is, again, they took it outside of the Bollingers, albeit they were narrow Bollinger Bands, so not as big of a deal. But still, I always respect that, right? I don't just laugh it off hey, it got outside those Bollingers. It's corrected a little bit, but has it corrected enough? And I'm thinking it really should probably come back towards the 20 there in light blue, and ultimately maybe even the 200, especially with the way some of those bigger stocks looks. Most of them do not look like instant bulls to me. There could be news or futures run that changes everything by 9:30 Eastern time on Monday morning. But I'm just saying, at this snapshot in time, those do not look like they're ready to do the old giddy up, as Pete would say. So we're not, we're not in a great spot leaving that week, and we're in kind of like middling RSI readings. So it's really hard to say, no, this, hey, the RSI is at 68. It's definitely more than likely going to come back a little bit more. On the daily look here, it's on 57. On the 4-hour, for example, it's at 52 on my other charts. So you can see that there's been enough corrective activity to take a lot of that frothiness out of the market. Let's take a look at our final one, which would be IWM, and this has been very interesting too, because this was really looking great out of the indices, and it was almost in a way like kind of like leading with the diamonds versus SPY and QQQ. It really was. And here's that kind of mini cup and handle we were talking about. There's your breakout. Now, if you follow the cup and handle measured move school, you should have gotten more than we did. Right on this breakout, you should have been able to go from about, let's ballpark it at 190. You should have been able to probably come up here and challenge that at the very least. I would think even higher, to be honest. I mean, you really should have gone further. It didn't. Will it stop here, reverse, and finally go? Maybe, but again, like that's clinging to that 20. The good thing that bulls have going for them is they've been relinquishing control for the better part of about a week, right? So even though you see some green candles in there, overall things were worked down over the past week of action. That's good for bulls that they let that go a little bit. But at the same time, it does make it interesting in that if they can't, you would think, right, this is where it has to stop. Look at that flat line that I'm mousing over right there. Right near here, there should be some really good support. So what I did in EO8 Pro was, when we got really crazy on the highs, we had some bearish ideas in that really didn't trigger in these index ETFs. So what I did was I tried to hasten to get some in from up there when we saw more paper. Those were good until really the 10th, which was Friday. Now I renewed a lot of those ideas from a lower level because things had dropped off, so that folks can still trade the downside. Because I do think it does look like to me that if this cracks, right, you probably, there's other flat lines in there. There's no question, but it could really, on an SMA basis, open up some sort of a 50-day testing, right? And then that would be, again, the big level. But I just don't think these things look great, right? I think to really feel better about being a bull in some of these things, a lot of you know me, I don't like to buy at levels because I don't like the whole falling knife catch. That's just no fun as a bull. So what I would want to see at this point, there's my people say, well, why don't you do this in real time for me? My answer is, okay, I just did that in real time for you. This would be my level right there, right? I want to draw a trend line, resistance line that makes sense. And to me, that one there makes sense. And if it can work its way through there on a closing basis, and probably want to take out the 10-day at that point in white, if it can do that, right, and then I start to see that there really has been some momentum shifting, then I'm really willing to entertain. Yeah, I feel a lot better about trying along here, not knowing for sure, but I'd rather try along here. If it just comes into a support level, I just don't like to buy it there. I want to see the stock show me that it wants to go back up at that point, that support's working, support is trampolining it a little bit back up, so that we're, that's why I'm a big stickler for trigger levels and momentum. And being able to hold that trigger level. Otherwise, right, I would either get out of the trade, or I would use my option techniques to greatly neutralize a lot of my risk overnight until position management techniques, that is, until I feel better about it to release it. Because I'm really not in it to guess for the next morning. I'm really in it mostly for days at this point, because trading the long side for weeks and weeks has not been so easy. Of late. It's just been the market. Want to cover just a few more things and then we're wrapping up. DXY, I think these are just as my final comments, I would say keep your eye on this, right? Because if this thing starts, they're bidding for the dollar, then that's concerning, right? That would be a concerning factor if they do that. And I think, right, you're obviously, with what the VIX did, it's sort of doing that little thing that it does where it erupts and then they back it off a little bit, and then you might dawdle around a little bit, and then there's usually like a second eruption. So kind of like this right here, where they took it up strongly, it didn't do much for a little bit, and they put another little pop together. That's the way that I've tried to always keep an eye on the VIX. And you can see that not that you could chart this the same way that you can in equity, but you can see that the SMAs are starting to round up a little bit. So maybe worth keeping an eye on that, keeping an eye on the dollar, because these things are not always wrong. And it's been, you can see, since there's been like a real eruption of the VIX from a low level, you've got to go back probably for that really bigger eruption. This one's not bad, but that's going back that's going back a couple of months. This goes back about 6 months. And then prior to that goes back about 4 months from there. So you can see that the bulls have been in control of the market, and it makes sense, right, that this thing continues to tail off, but it's starting to show a little bit to us now. And I think that and the dollar moving back up are, obviously things to keep an eye on, I think, because there's warning signs there, right, from that. These things are starting to maybe get a little bit of a bid, and that's normally not good for the equities market. So that's why I feel like it's such a hard call to summarize, because if you look at the breadth that we've seen, there's been nice corrections. Things have kind of left that overbought zone in a big way. You could certainly go forward from here and not feel like you're instantly overbought. That's not the chart that I wanted there. I wanted to just show a couple more things, but of course, this is so hard because I've got as you can tell, I've got so much stuff that I'm working on right now for different reasons that I can't even get into where I wanted to go to, in terms of my other tabs. But I'm going to leave it at that because I covered the main thrust of what I wanted to go over. So summary was, again, breadth, it's corrected enough. The bears sees a little more control, but the bulls, I think you have to give the benefit of the doubt because the intermediate trend is still up for now. Give it a little breathing room. Probably should come off a little bit more because ultimately those big names that we looked at do not look stellar at the moment as great entry points for a long. So it really came down to splitting hairs a lot more than usual this week for me. But I would say overall, probably comes back a little bit more. And then we have to see how they handle support, much like last week, and then go from there. If they keep things looking constructive above the line we talked about, above especially the 20, I'd give them the benefit of the doubt, but that seasonality says, that might not be so easy to do in this third year, that the market's pretty much followed fairly closely so far. So I'll stick with that thinking and incorporating that into what we're thinking until it really leaves us in the lurch. So on that note, I'm going to say thanks for tuning in. I hope this whirlwind around the markets, I hope something I've shared with you helps you out this week or in the future. And again, thanks again. Be nimble out there, and we'll be in touch through our webinars, et cetera, et cetera. Thank you.